So you passed the funded account. Now this is the closest you've ever been to making money from the financial markets. Now it may sound daunting that you now have a funded account that's taken you so long to get, but in this video I'm going to be showing you how to extract profits from the market effectively and efficiently using your funded accounts. Okay guys, so now we're on to our mind map here. We have our fresh account and I'm going to show you the exact steps on how you should be managing it. So going straight into it, we need to be securing profits for our first withdrawal to get our initial deposit back. Now most prop firms only allow you to request a withdrawal if you've made 1% of the account balance, so we need to be aiming for this 1%. Now you need to check your prop firm's FAQs. If it's over that, obviously you need to target that. But let's go on to this here. We have do whatever you need for a payout. What do I mean by that? I mean trading to get this payout. Now by all means keep trading your strategy, but you need to be doing whatever you need to do for a payout. By this I mean potentially taking profits early than your normal risk to reward. So say if you're running in 1% profit, take it. That means you can get your initial deposit back and you can get that 1% profit split. So just take that money there. Now we're on a live account. We need to be making sure that we're lowering our risk on the funded, because obviously we usually increase our risk on the challenges just to pass those phases. But now we're on a real live account. We need to be minimalizing the drawdown as much as possible. Now, for example, if you're risking 2% a trade on a funded account, you have only 5 trades until your account is breached due to overall drawdown. So if we're going down to 1%, then you have 10 trades, which I tend to do. I usually use 1% myself on funded account challenges, maybe max 1.5. So I would recommend that sort of risk tolerance. Now moving on to our next point, we have do not aim for stupid numbers. Now this links up to do whatever you need to do for payout, because by this I mean don't be aiming to hit it big. By trying to hit it big, you're more prone to trading errors. So stop aiming for stupid numbers. Let's just get this first withdrawal sorted. Now this point here is very important. Let me read it out for you guys. Remember, any money you get is amazing, as you have not had anything yet. So don't get greedy. I've seen so many people blow their accounts for greed, but it really doesn't matter whatever the number is. If it's $100, if it's $200, it really doesn't matter. Any number is great. You've beaten the horrible statistic. Now moving on to statistics, we have a fact here, which is in prop trading, a small percentage of traders reach payout, which is obvious, everyone usually knows this, but around 7%, a very small amount, only achieve payouts. So if you do get this first withdrawal, you really need to be patting yourself on the back, because that is absolutely amazing. You've gone through phase 1 and phase 2 and you're getting real money out the market now. So really do give yourself some credit. Most people have losses when they're first learning, so try and mitigate them losses. Stop aiming for stupid numbers. Just get some money out the market. Let's find some consistency and get these losses out the way. So now summarizing this, we have to keep these into considerations, that we need to lower our risk on the funded account. We need to do whatever you need to do for the payout, and you need to not be aiming for stupid numbers. And also, you need to be remembering that any money you get from the market is really impressive. Okay, we've got our first payout. What should we be doing with it? Okay, so first of all, we need to be putting money away for taxes. Okay, you are not invisible. The tax man is going to come find you. You know what I mean? You don't have to have made £12,570, but get into the routine of putting money away for taxes. Okay, you have already got money there to then mitigate the tax return for when you need to. So it's just actually helping you out in a way. 1, it's getting you in the routine of putting taxes aside, and 2, it's going to help you out in the long run for when you actually need to pay your taxes. You've got some money there that you can put towards it. Now the second point here is spend money wisely. Okay, I've seen so many people spend their first payout badly. What you should really be doing is investing back into prop firms, depositing into a cash account maybe, and also investing in education. You're always trying to build yourself as a trader. Okay, so after you've worked out what to do with your money, we have our account back. Okay, so what should we be doing? We should be trading our accounts like we normally do, but with lowered risk to challenges. Now I did say lower risk at the start, but we need to be keeping some continuity through this funded account. So moving on here, this is so important. We need to be remembering that these accounts aren't our own money. We don't need to be aiming for crazy RRs when we're break even, because anything above that break even threshold is your money. Unless you can afford to do so, don't be aiming for crazy risk reward or always holding to TP. If you see money there, just take it. That's some income for you. You haven't had a lot of money out the markets before, so just take it. It's okay to take profits early. I see so many people all the time always holding to TP. Unless you can afford to do so, just take the money. All right, just take the money, it's fine. Then on the other side, you do need to be aiming for RRs when you're in drawdown, okay, to get you to that break-even threshold or back in profit, to mitigate all the losses that you potentially have had, and also to get you back in some profit. Now, another point is do not try to compound the account. I always say by all means risk profits when you can afford to, but when you see the money, just take it. You know, it does link back straight to this point, and this one does also link back to this too. But, you know, when you see the money, take it. Don't be trying to compound the account. Just take the profits, okay? Use it when you can afford to do so, but do be taking your profits out the market. That's money that you haven't had before, so just take it. So yeah, moving on here, we have aim to consistently withdraw profits. It is obvious, but it's not to always sum. People are always trying to hit it big, which also refers back to it's a long-term game, not a get-rich-quick scheme. It's very important that you guys understand that, you know, we're trying to be consistent here. Now, hopefully we get our second payout and we'll go back to this point here. More payouts secured, and we will know what to do with our money. So guys, hopefully this video has helped you work out how to manage your fresh funded accounts. And if you haven't already, make sure to like and subscribe. Currently, we only have about 50% of viewers subscribed to our channel, so any subscription would be greatly appreciated. Thank you guys for watching the video, and I'll see you in the next one. Bye.